not surprising the markets are struggling to kind of advance here. They're still very elevated above the 200-day moving average. We're getting a little bit overbought. We are on a momentum buy signal, so that is supportive. And as we talked about yesterday, just kind of expect a little bit of sloppy trading here. Here's what you need to know before the bell this morning. We talked about yesterday that don't be surprised if you see a little bit of weakness in the markets here over the course of this week. We're still in the middle of mutual fund distributions right now. That's going on. And so you're going to see a little bit of choppiness potentially in the markets. Plus, we had a really decent rally coming off this kind of Thanksgiving low that we had going into Thanksgiving. We had this 5% decline-ish going, in from October, first 2 weeks of November. Everybody was very concerned about the markets. Since then, we've recovered all of that, and we're starting to challenge, back here at all-time highs. This has just been a really big, kind of consolidation range now for the last, kind of month and a half. Just really not going anywhere. Just really, as we talked about yesterday, just consolidating that big rally that we had from April till now. So again, not surprising the markets are struggling to kind of advance here. They're still very elevated above the 200-day moving average. We're getting a little bit overbought. We are on a momentum buy signal, so that is supportive. And as we talked about yesterday, just kind of expect a little bit of sloppy trading here. Even a bit of a pullback would not be surprising to come down, potentially retest the 20-day moving average, which is also where the 50 is, right around 67.30-ish, 67.40. Bounce off that, trade higher into the end of the year. That would kind of really set up with seasonal patterns as well. So again, between today and tomorrow, again, what could cause that? Fed's a little bit more hawkish tomorrow than expected. Markets sell off a bit, and then markets start to reprice, start to look forward into next year. They start anticipating further rate cuts. They were hawkish now, but next year it'll be better. That's always kind of the outlook for Wall Street. And then, of course, you start to build in, window dressing for the end of the year. So, and again, you kind of wind up maybe back where we started. But again, this is just kind of where the market is right now. This is going to turn out most likely, unless something just goes horribly wrong between now and the end of the year, we're likely going to crank out 16, 17% returns for this year. That'll be the third year in a row of near 20% gain. So again, it's going to be a very good year, but that also kind of sets us up for questions about 2026. Anyway, just kind of keep paying attention to this. Nothing wrong with the markets right now. They're a little bit extended. A little bit of sloppy trading here would not be surprising. But again, positioning your portfolio for year end, I wouldn't make any major changes expecting a big decline between now and the end of the year. Could it happen? Sure, anything can happen. But most likely, markets are going to kind of travel sideways here, maybe a little bit higher as we get closer to year end. That's what you need to know before the bell this morning.